Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. We're going to take off the free trial segment here on the right and telling you that the question board is open. If ever you have any questions, folks, feel free to ask them. Today is the last day of the week because tomorrow American and Canadian markets are closed. Our Decision Plus offices also will be closed and we will be back on Monday, April 6th. Today, the sector that is the leader today on the upside is the energy sector. I did a YouTube Chronicle earlier today. It was released before the show started around 12 o'clock. I invite you to take a look at this YouTube channel to see what are the stocks that could break out. But I'm also going to show you during that show the list of the stocks that could break out on the energy sector. We're going to take a look also at the consumer staple and discretionary sector as well on the TSX. And mostly our attention is going to be focused right now on the TSX because compared to the other indices, it's definitely the index where we might have the best buying signal so far. Now let's take a look at the situation here where we have the Nasdaq that rebounded, getting further away from that support, but still remains flat within that sideways formation. Same thing too for the Dow Jones. And the TSX is a little bit stronger though because the energy sector is the one that is taking the lead. If we take a look at the sector here, there have been, several stocks that broke out in the energy sector. For instance, Canadian Natural Resources that broke out, Neocorp broke out in the energy sector. But for a stock like Canadian Natural Resources, as I said, it's okay to buy energy stocks today. There are some nice opportunity. Yesterday, we published a list on MarketGurus.tv. I've talked to you about that at the end of the show. So you can have access to the full list on MarketGurus.tv by making the free trial. But a stock like Canadian Natural Resources, let's take a look at what are the risk factor on a stock like that. First of all, the first risk I see is in terms of volume. We're breaking out on weakening volume, which is not that great. However, there's also the possibility that at this 200-day moving average around 40.60, that we might have a pause, which is something that's not so good because it doesn't give us a 10% potential. But the good thing is that we are also reversing this downward trend. And the last thing that's actually a little bit negative is the fact that tomorrow we're going to have the employment report. If it's negative, that might just bring a wave of sellers among energy stocks. And this is actually one of the reasons why, if you want to buy CNQ today, I think you should go in with a half or quarter of a normal position and put your stop loss, trend trade that stock, which means you will hold on to it as long as it maintains its upward trend, and get rid of it if it goes below 38, 34 for Canadian Natural Resources. So it's an opportunity, yes, to buy some energy stocks, but you have to go gradually. That's the key strategy, though, on the energy stocks. Neocorp is also a great example of that, already surging by 9.16%. So half of a position or less than that. 130 could be a stop loss, but if you're not comfortable with 9.16%, what you could do is that if ever we lose all today's gains, higher than 133, you close out positions. Western Energy Services as well is also a nice breakout, clearly reversing its downward trend, but same thing. Actually, it's way better than Canadian Natural Resources. Yeah, that stock is nice. Let's just put a Fibonacci retracement on that stock to give us some perspective. See, the next target now becomes 715. So what 655 to 715, it's not 10%, but that's actually the first target you have on a stock like Western Energy Services. And what I like is that volumes are not declining. So this is something that's good. They're at least around average. So Western Energy Services, I think, is definitely a great stock to consider. Stop loss, $6 on WRG on the TSX. Now let's take a look also at some stocks in the consumer staples sector and consumer discretionary sector. In the consumer staples sector, stocks like Alimentation Couche-Tard, which is a stock among our analyst shares portfolio and Market Gurus.tv, is still doing well. George Weston, it's a breakout. Loblaw rebounding. I think it's still an opportunity to get into it if you put your stop loss at $61, because at $61 we will reverse this upward trend. So that will be negative. Metro, it's not a breakout, but it's still a point where you could build up your positions with an exit point at $34 on Metro. And we're going to take a look at the consumer discretionary sector, where some stocks like Canadian Tire are pursuing their yesterday's breakout, and other stocks like Reitmans broke out on their earnings. Okay, so we also have Gildan that could break out as well, higher than 38.50. Quebecor, higher than 34.25. There's a lot of stocks in the consumer and discretionary sector that is published in the list on MarketGurus.tv where stocks are near breaking out. So a lot of them are in the consumer discretionary sector or the energy sector, where several stocks could break out on the TSX, but also on the US indexes. Now, John has a question here. I don't understand why a positive employment report can make energy stocks continue their rally. Please explain. Well, one of the reasons why a positive employment report could help energy stocks is because if we have positive employment report, investors will say, there's more jobs in the economy. If there's more jobs, well, then people are going to consume more. If they consume more demand for energy. So this is actually the argument that is behind why a positive employment report could help energy stocks to pursue the rally. It's not going to be the only reason, though. Of course, there's the bigger ways with what Iran and the other world powers are doing, with what Saudi Arabia is doing in Yemen. So those are actually factors that are weighing a lot heavier on the oil direction or the energy stocks direction. But a positive employment report definitely could add to the rally and could help energy stocks pursue their upward momentum, simply because by adding more jobs, investors expect people to consume more, and more consumption leads to more energy demand. So that would be a reason why, John. Now, David, is it a go on Junex? Actually, Junex has been recommended in the top 5 on Market Gurus.tv and the Venture Index. It's a stock that's active. Nah, forget it. Forget it. Now, for entry point on Junex, I still see it's a no-go, right? There's still that downward trend that's there. On Junex, it's this downward trend is really solid. As long as Junex doesn't go above $1, for me, it's a no-go. It's ready. It's getting ready, though. It's getting ready. We do have a stochastics that's tilting, but we do not have a reversal yet of the stochastics, of the downward trend in the stochastics. I love the MACD here, right? Because we could get towards the overbought situation. The only thing is that I'd like to see a clearer confirmation. $1 and higher, that would be a go. But for now, Junex, it's a no-go. I think it's still too dangerous right now for a stock like Junex. You rather wait for Monday or Tuesday to see how the energy stocks are going to react. If they can pursue the rally, I definitely think that Junex could benefit from that. And higher than $1, I might give it a shot for Junex. And by putting my exit point around 85 cents on a stock like Junex. So that would be my advice. It's still a no-go right now because it is still within this downward trend. Now, Mark, he bought HGU. Okay, you bought HGU yesterday. Do you think I should sell partially or totally? So you bought HGU yesterday. Well, it was mostly for day trading, Mark, that we advised on the gold sector. Now, should you sell? Well, technically speaking, HGU has not yet reversed its upward trend. If you take a look at how gold is doing, gold is still within a sideways formation. Gold is going down today because the Greek government came out giving new details concerning the reform plan. Investors are encouraged by that. But if, again, there's some worries concerning Greece, we might see gold breaking out again. So I don't think that you should rush to close that positions. However, I think the mistake that you did is that you held on to HGU yesterday and still today. While what we advise to do is to mostly day trade, which means if you bought a position today on the yesterday on the gold sector, you should have closed it. So I will hold on to HGU, monitor what's going on between Greece and its lenders. And I think if gold could break GLD, I mean gold for GLD can go higher than 116.12, well, that would be a point where I will definitely consider to take some profit on HGU. Technically speaking, HGU is set for potential rally, but as I said, there are more fundamental macroeconomic factors, fear, that will drive the rally among gold stocks. And right now, I don't think you should close that position. You hold on to it as long as it remains above 550, which is that upward trend. But you have to monitor what's going on in Greece. So we're going to take a look at the other questions in the next segment.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back. We have one interesting question here from Andres about BTE. Please give me your views on BTE. Well, Andres, first of all, BTE, it's a stock that's definitely worth to be watched. It's testing a downward trend there, right? It's not a go, but it's stabilizing, which will make it a great candidate for a buying opportunity if it does go above 1677. This is the things that I don't like with that stock. Weakening volume, stochastics 933 overbought, stochastics 15, let me get it, it's over there, okay, 1555 overbought. So 2 stochastics that confirm that we clearly overbought. This is the things I don't like with that stock. That's why I would not get into it right now. Also, if ever we have a pursuit of the rally among energy stocks, now, what will be the target if BTE, sorry, it's in the TSX. Okay, yeah, this one is better. If BTE breaks out, what will be the target? Well, the target will be, let's put a Fibonacci retracement from that top here, right, to that bottom. We see that the next target now becomes around 23.20. So if BTE can at least go above 20.68, the next target now becomes 23.15, and the next target thereafter becomes $26 on BTE, almost around this resistance there. Now, for the moving average, is it positive? So far, the 10-day moving average, which is in red, did not go above the 30-day moving average, which is in yellow. And that's what we need to have. So with this overbought situation, with the fact that it's still testing that downward trend, unable to reverse it, I think that we're more due for stabilization phase on BTE. I would not buy it now. However, if the morale is stronger next week on the energy stocks, I will feel comfortable to get in on BTE higher than $21. 23.60 will be the first target. The next target, $25 for another profit-taking opportunity on a stock like BTE. So that's my advice on a stock like that. It's nice, it's neutral, but it's not a go yet. Now, is MPEL on NASDAQ a go today? Oof, yeah, it's you bottom fishing, right? An important support that's solid. You could build up your long positions on that stock. $21 as an exit point. But I don't really like casino stocks nowadays, though. A lot of those casino companies and gaming companies are actually, a lot of them have big revenues coming from China. There's a big campaign going out against corruption in China. So a lot of officials who used to steal a lot of money from the government coffers and used to spend it on casinos are not doing so as much because the risk of being caught and sentenced for death sentence. So revenues have declined in Macau, which is the biggest gambling city in the world, bigger than Las Vegas. And those companies, of course, are taking a hit. With lower revenues, it's not positive for companies like that. So a stock like MPEL, even if you bottom fishing, buy that stock at a low, put an exit point at $20 below that support, it's still okay, but $25 maximum, this is where I see a point where you should take some profit. Is it worth it? For me, by looking at the fundamental factors for casino stocks, it's definitely not a stock I will feel comfortable to acquire for the moment, right? Because of the corruption campaign, anti-corruption campaign in China, and the fact that a lot of companies, small, major caps, that are heavily weighted in China, that have a big portion of their revenues coming out of China, I've seen a decline in revenue since the corruption campaign started out. If you want to buy that stock, $20 is your exit point. $25 should be the point where you should take some profit and get out on a stock like MPEL. Now, what about HNU? HNU moved today on the natural gas inventories release. For me, it's not a buy at all. It's still within a downward trend. Natural gas is having a tough time, though, but it's definitely tough to tell what direction it could take, right? It's right now neutral, could reverse its downward trend. So for me, I would not even touch HNU right now on natural gas because it only rose after the inventories release. And for me, I think it's better to see a clearer confirmation of the rally, at least until 14, 12 and higher before considering a buy on a ETF like HNU, which tracks natural gas on the upside. And you see HNU is also within a clear downward trend. So on HNU, at least above 415 for HNU. Now, as for the best day trade of the day, it's a stock on the NASDAQ, NYMX, one entry point here, one there, another one there. Now it's having some decline, but it could reverse this downward trend. 180 will be the new entry point. If we take a look at the stochastics here, we are in the oversold situation. So if ever we could have a reversal of this oversold situation to head towards the overbought situation, that would be a go, but only higher than 180 on a stock like NYMX. So today, folks, energy stocks are the leaders on the TSX. They're helping the TSX to stay strong. Yes, you can open some positions among some energy stocks. If you want access to the full list, It's all on marketgurus.tv, or you can take a look at the chronicle I made on YouTube to take a look at this. As I said, if you're buying energy stocks today, make sure you put your stop loss on those positions, because the employment report tomorrow, where American and Canadian markets will be closed, will have an impact on this rally that will be felt Monday or next Tuesday. So this is why it's important to put your exit point on the positions that you buy and not be in a buying spree. That's important. That's the strategy you should take out of this show today. And elsewhere, folks, I think if you already had some positions where you already took some profits, let them go. It's Easter, so I wish you all a good Easter time with your family. And me, I'm going to see you on Monday on the Swing Trading Show on DecisionPlus.com. Happy